Good afternoon. Welcome to OptionsTender. Happy Sunday, everybody. Happy football day. I just wanted to do a quick video and kind of give a big picture look at SPX, NDX. We're doing the cash indexes, RUT, and DJX, just to give you a visual of what has happened throughout some of these corrections and how this correction could pan out / recession. These are recessions here. There's not, a huge amount. Clearly, the bulls reign king for most of the time, but when you get to an extended point, you have a correction. Okay, and those are the major recessions, and then you had corrections within the bull markets as well. I think we're in the point where we're doing a major correction. And so all I want to really show in this point of view, if you're new here, first of all, go down to that bottom right hand corner, hit that OptionsTender logo and subscribe. And don't forget to like the video. But we want to show that this is the 1929 top, 2000 top, and 2024 top. We also have a possible channel, a potential channel here from 2008, 2021, and we're at that confluence right now. So these are very, very precise, right at the tip top edge of here. And then that's the 2000, and we're right at exactly that point right now. So I'll show you on NDX also a scenario just in case if things start to break out to the upside. I'll show you what that might look like if you're in that camp. I certainly am not. Okay, it has to prove itself to me first. We're in the puts. We're in the put side. All right. So what we did in the last videos, we showed a little bit of comparison to a major move, and that's 2000. I think that'd be more appropriate, and that was a little bit more of a I want to say conservative move, because this initial move on 2008 was a lot more aggressive. Okay, so we talked about a 14% move just in the first, I believe it was 16 trading days, 19 trading days, somewhere around that range. And then we had 100 and I'm not going to go through it again, but 140 days of consolidation before the continuation. So this is a flat pattern. We talked about that. And so this is an ABC where it was a 5-3-5. That's a zigzag. And then a 3-wave move up and a 5-wave move down. And so after getting this 5-wave, we know that's an impulse wave. And so things were much more aggressive to that side. So I'm going to show you that. And a 14% move is quite significant in that such little time. And I'll show you on the other time frames. I'll show you on SPY so you can kind of translate what that looks like. I forgot to do that on the last video. Okay, so let's look at NDX. And what I want to point out with this is the 2000 top here. You see how it's much more higher. That's the tech bubble. So we're talking tech bubble. And then and then I'll show you financial crisis. So ultimately, I'm going to think about this being a everything bubble that people keep talking about. So financial crisis, tech crisis. Now, after this large peak and run from tech market, we had an aggressive move, almost 40. I think it was some big number, 30% move to the downside in the first the first 16 days in comparison. I'm not looking for that. I'm not looking for that in particular. Okay, we're going to stick with the S&P being that middle ground where we think 14% is a 10 to 15% move in the first initial move is quite possible. But this one, the tech market really aggressively led everything down. Okay, so you see the sharp, steep move. And this, I can argue, is the zigzag 5-3-5. And so in my mind, I think this is a wave 1, 2, and we're at the top of wave 3. Or wave 3 is going to extend where we get a 1-2 here. Okay, that's another possibility. So we'll be looking at this structure first, and then this entire structure possibly being the end, because you have, I was counting this. I don't think I have the count on this one. I do. Okay, yeah, so 3, 4, and then you have a 1, 2, 3, 4, 5 to extend this as wave 5. So is this the end? Or do we have a 1, 2 where this 5 extends? Okay, that's possible. Or this entire thing right here corrects. That's going to be a much larger move if that's the case. And that would all be a 1 and a 2. And then we continue wave 3. Yeah, that would be a super cycle. Okay, so the comparison I want to do here is now look at, this was a higher low. We got a lower low in SPY. So we had a flat pattern in SPX or SPY. And NDX, this was the correction here, sharp correction. And we had a 1-2. So you see the relative strength in tech at that point, relative strength before aggressively moving. Now look at this. This is really interesting because now we can talk about this in a sense. We can put all this together now. So here's the 2000 top. You know, this wasn't screaming to the upside. It was being dragged by the tech market. And then while tech was just ripping to the downside, the small caps were just, it had an A, a B, and a C. Just, you know, of course it was a devastating move, but nowhere near as sharp. Just a consolidation, you see a correction, but a higher low. Okay, and then this higher low led the market. The small caps led the market. The banks, the financial crisis. Okay, do you see where I'm getting at? So this is the tech bubble. This is the financial bubble, and that was led by the finance. You see the aggressive move to the upside, new highs. Tech was nowhere near new highs here. And after that, a big correction, the financial crisis where the small caps led everything. All right, but even with that aggressive move, still a higher low. So I think these are market structures forming. And then at the end of this move, I think we're getting a sideways move here in the small caps, where we're going to get a sharp move down, right? And that's going to be a flat pattern. And that's going to coincide with, I believe, this structure here. And so we could easily make new highs at that point, while the tech market and SPX, the S&P, makes a lower high, in my opinion. Okay, so what I'm thinking right now is we're talking about this being the everything bubble. So I think all of these moves are going to be just relatively the same to the downside. I don't think there's going to be, hyper aggressive move from, what am I trying to say? A relative strength in the small caps. Overall, yes. The big picture, yes. But this initial move down, 535, could be a zigzag here. It could be just an initial 5-wave move for the small caps on NDX. First initial move, 5-wave move, maybe testing here down to 11,000, the lows of 2021, 2022. Okay. 5-wave move. They would all look kind of the same at that point. And then after that correction, I think we're going to get a lower high, maybe a back test of this wedge, and then an aggressive move after that. Okay. So, and then while that happens, I think we'll get relative strength in the small caps, and the small caps should make a new high and then have another correction with the rest of the market. And we'll see where that goes for now. That's all speculative, but this is being I don't think this we're going to have that huge difference in this. That's what I'm kind of getting at here. All right. That plus this aggressive move there equals this. All right. So that equaled it all out. While tech took over here, small caps didn't perform. Tech didn't perform here. Small caps were aggressive. Okay. So, but I think these are going to go in tangent together. So five wave move down. We're looking for an impulse wave first. And then what happens after that is completely unknown, but it could be a sideways move. You could make a triangle. You could do all sorts of things. But the first move, I believe, is going to be a 5-wave move, okay? Now, what else did I want to show? NDX. We do have some looks here. I know I put it at the bottom of that spike. So that's support. And so this is just a good way to look at this. It's not the kind of wedge that I'd want to put together from top to top to top kind of thing, but it fits. It's geometric, and we're at the top from that point. The most important part is from this top to that top to this top. We're at that. Now, what I want to show for the bulls, just really quick, is we're forming a wedge up here. And if the bulls want to decide to get aggressive, we would have drawn this as a wedge. And at some point, that wedge broke out to the upside for a blow off top. So that's something in the bulls' favor if they want to play that aggressively. The 8 EMA led that the whole way. So we haven't broken down from the 8 EMA. I can't rule that out. So what we're looking for is a break above any of these wedges here in SPX. I think this will be the more obvious one because we're at such a critical point here. We get above that, and that's a break. If we get a monthly close above here, a good significant run, 100, 150 points, I think we're looking for a blow off top at that point. But I'm not there. We're right at a critical point. I think we're reversing off of here with all the divergences, all of this stuff playing out. Okay. So we'll know if there's a catalyst and it starts to burst to the upside. Well, hey, we gotta roll with what the market gives us. Okay. Let's go ahead and go to SPY and just quickly look on the 65. Or here's SPX. It doesn't matter. You see that it does matter because I want to show you. I don't want to forget again. So we have SPY on the 65. What will this look like if we played out very similar to 2007? So we have our wedge forming here. We're at the peak there, and then we're really a smaller wedge. We broke down and back tested, and we couldn't quite get above this trend line here. So this is a good point. If you're short in any near term, if we get above any of this, above where we are, get back in the trend line up above, then this isn't playing out, and you might want to get out of your short term at least, and then start looking to the upside. I think we're there. But if this were to play out aggressively in such a time frame that we were thinking, then maybe I should let me go to the daily first. And we have the daily drawn out in a straight line. Of course, nothing goes straight. Let me move this bubble down, the label to the middle here. This is a 14% move, 23 days, 16 trading days. Wow. Huge move that would take us from the peak, if this were the peak on Friday, all the way down to a great support resistance around 525, we'll call it. And that's a little bit less than what 2007 did. All right. And that 2007, I believe it was a leading diagonal, and it was very aggressive. So let's take a look. at just what it could. I'm not saying that it's gonna look just like that, but maybe we get the bounce off of the trend line and then get a more aggressive wave 3. So you have a 5-wave move down here with overlapping. If that were the case, it can be a pure impulse wave where we don't overlap. It could just be a 1, 2, 3, 4, 5 straight down. Okay. But I wanted to give the benefit of the doubt if we're kind of looking at the roadmap of 2007, and let's say we just close the gap. After closing the gap, we go to back test the wedge into FOMC. So wherever price is at into FOMC, that could be a reversal, or it could be a bounce place. All right, that could be a catalyst. And let's say we're back testing the wedge, and we break down from FOMC, which would probably be really aggressive, and then again a large bounce, and then just a devastating move to the downside. That's how 2007 played out, not in exactly these percentages. Okay, so that's one possibility, and then the other would just be a really symmetrical drop, which it could be a short one, bounce, and then wave 3 be just devastating, and then get a sideways wave 4 and finish off wave 5. Okay, so it doesn't have to look like this, but I thought, hey, this is a scenario that 2007 did because of the buying pressure, because nobody believed. They kept buying, and so it was a very, very volatile time. All right, and then after this played out, there was 140, I want to say 40 days. I might have mapped it out. I do a lot on SPX, so I didn't do it here. So let's go back to SPY. Sorry to keep jumping around, but here, after this, we had a bounce that was about I believe it was 140 days. 140 days and a 90% retracement, which would look something like that. Just a massive, massive move. Okay, why don't I just show you? And then we'll go ahead and look at QQQ, and then we'll end this. So we're at 2009 there. Okay, yeah, okay. So I did map it out in this one. So here you have 14% move to the downside in 16 trading days. And look at the aggressive. You have wave 1, sharp wave 2, and then a drop. It looks like within 1 day, and a wick in the same day. Massive volatility, which bounced way up here, and then an aggressive move to the downside. All right, so 1, 2, 3, 4, and 5, and then look at this: 140 days. That's almost 100 trading days for 15% retracement. And that was about right there. That was a 90% retracement for a flag pattern, and then broke down from there. And then it got much more aggressive because the buying pressure couldn't make a new high, and then everything started to sell off. Okay, so with the Qs. Qs were in the same exact position. We formed a wedge, and we're right at the top of that wedge again. And I drew out more conservative 17% in about 20 days. So I kept it around the same. That would be closing the gap here. And both of them were basically testing the lows of the wedge. So if they all start getting aggressive, I think they all start moving in tandem together. And I didn't do anything with IWM, but you would get the point. that we're probably going to get aggressive at some point and retest the bottom of this low here. So it's going to happen quick when it does. That's what I want to show you guys. So thanks for watching, and we'll see you tomorrow.